Hello, neighbors, and welcome back to the neighborhood. I'm Squealer D, and I am back again. And this time we are learning about the relative strength index, which is an indicator in the stock market, neighbors. And we have talked about this several times in the last 20, I don't know, what is this date, like 29? So we've talked about this many a times. We've looked at the RSI as an indicator on the maps. Today we are going to read more about it so that it can bop into our heads a little bit more. So we will read this article by Jason Fernando. He's a professional investor and writer who enjoys tackling and communicating complex business and financial problems. And Charles Potters reviewed it, and Timothy Lee is a consultant, accountant, and finance manager. So he helped fact check it. So they got their best minds on this, guys. We're going to give it a read. And then, like always, we are going to bop over here into Yahoo Finance and read the finance news and check whatever it is we need to be checking to learn what we need to be learning to be able to trade on the market. So if this is your first time, like I said, we do have a whole playlist, and it is called Stock Market Learning. We're kind of high here, guys. Let's lower your camera down a bit. There. So we have a folder on our YouTube called Stock Market Learning, and it has all of these videos in it. It starts way back at the very beginning of what is a stock, and the Buttonwood Agreement when the stock market came about is very interesting. If you want to watch the Buttonwood Agreement, get yourself started and catch up with us, guys. We are going to learn how to sell and buy on the stock market. So today is RSI. Like I said, that's called the Relative Strength Index, RSI. It's a technical indicator. Remember when we talked about technical analysis, different technical analysis that you could do to find entries and exits? Well, this is one of the indicators, RSI. It's used in momentum trading that measures the speed of a security's recent price changes. So it measures how fast we're moving. So the relative strength index is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. The RSI is displayed as an oscillator, a line graph, on a scale of 0 to 100. The indicator was developed by J. Wells Wilder Jr. and introduced in his seminal book, 1978 seminal book, New Concepts in Technical Trading Systems. The RSI could do more than point to overbought and oversold securities. It can also indicate securities that may be primed for a trend reversal or corrective pullback in price. It can signal when to buy and sell. Traditionally, the RSI reading of 70 or above indicates an overbought situation. A reading of 30 or below indicates an oversold condition. The Relative Strength Index is a popular momentum oscillator introduced in 1978. The RSI provides technical traders with signals about bullish and bearish price momentum and is often plotted beneath the graph of an asset's price. An asset is usually considered overbought when the RSI is above 70 and oversold when it is below 30. The RSI line crossing below the overbought line or above oversold line is often seen by traders as a signal to buy or sell. The RSI works best in trading ranges rather than trending markets. So, how the relative strength index works. As a momentum indicator, the relative strength index compares a security's strength on days when prices go up to its strength on days when prices go down. Relating the result of its comparison to price action can give traders an idea of how a security may perform. The RSI, used in conjunction with other technical indicators, can help traders make better informed trading decisions. Calculating RSI. The RSI uses two-part calculations that starts with the following formula. RSI step 1 equals 100 minus 100 over 1 plus the average gain and the average loss. So, the average gain or loss used in this calculation is the average percentage gain or loss during a long back period. Oh, during a look back period, a long back. I was thinking about a tall girl, a long back. The formula uses a positive value for the average loss. Periods with price losses are counted as zero in the calculations of average gain. Periods with price increases are counted as zero in the calculations of average loss. So, it would be zero. The standard number of periods used to calculate the initial RSI value is 14. For example, imagine the market closed higher 7 out of the past 14 days, with an average gain of 1%. The remaining 7 days all closed lower with an average loss of 0.8%. The first calculation for the RSI would look like the following expanded calculation. And guys, don't get scared because we're talking about calculations. Listen to this guy right here pointing. 1 minute. Don't get lost. We don't have to do these calculations. You're not going to be sitting here before you buy a stock doing these calculations. These are on, look, I don't want to scare you guys. Don't just go running away because it's talking about math, okay? I know a lot of people, they see math and then they nope out and they shut it off. I got my coffee today, guys. D is for don't shut it off. Do not shut the stream off just because we had a little bit of math. Oh, look, Riot's back down today. Check it out. So we got our indicators up here, guys. This is MACD, what we talked about yesterday. You could see that in the folder called Stock Market Learning. We talked about the MACD line and what it is. And here is the RSI line right here, guys. See, it's just a single line. And it moves above and below. Right now it's at 51. See? It's right there at 51. We can make it bigger too. So you can see when it goes up, it's oversold. And then when it goes way down here to 29, below 30, that means it's undersold, overbought. Undersold, overbought. That's right? So if it's below 30, it's oversold. So down here, oversold. Over here, overbought. Oversold, overbought. Okay, we got to remember that. And remember, look, the RSI, it's right here, guys. They're doing the calculations for you. You don't have to do the calculations, okay? They want you to understand how you get the calculations. Excuse me. Dry throat in the morning, guys. Always got to bring your water. You can have your coffee, but make sure you have your water. Okay, cool water. I feel like my face immediately went like it's not as like pruny now because I drank water. Okay. Alrighty, so let's see. We're not going to have to do this, guys. They just want you to understand it. So if you're a little lost, keep following. Keep following. Reach ahead for the person in front of you. Keep following. Do not back out just because you see this, okay? So here, the first calculation for the RS would look like this. 55.55 equals 100 minus 100 over this. And this is where a lot of people nope out, guys. It's okay. It's okay. Just keep listening. Once there are 14 periods of data available, the second calculation can be done. Its purpose is to smooth the results so the RSI only nears 100 or 0 in a strongly trending market. Okay, so that explains why they set it up like this, guys. So, 14 periods, and what they want, if with this 100 at top and this 100 here, what they're saying is with this calculation, it's going to smooth out the line so that the results of this answer is always near 100 or 0. You see what I mean? So that we will have a steady thing like this, and we're not getting way outliers way up here at like 55 million. So plotting RSI. After the RSI is calculated, the RSI indicator can be plotted beneath an asset's price chart, as shown below. The RSI will rise as the number and size of the days increase. It will fall as the number and size of down days increase. Okay. So Here's the 7. Here's the 30 down here. We can see how over time, see how the RSI goes down when it goes down? Back up, back down, back up, back down, down. You see that? As you can see in the above chart, the RSI indicator can stay in the overbought region, that's overbought, for extended periods while the stock is in uptrend. So it's here, it's uptrend, it's going to stay in the overbought period. The indicator might also remain in oversold territory for a long time when the stock is in a downtrend. So you see stock going down here, and it's oversold. This can be confusing for new analysts, but learning to use the indicator within the context of the prevailing trend will clarify these issues. So it can stay down here. Everything that we learn, all these indicators, there's always a caveat, guys. It works, but it can do this. That's why with this one, if you remember with the MACD, guys, when the MACD goes up, it could go up wrong. Like it could be wrong, right? So, come on, guys. I don't know what's wrong with this. We got to close these. Let's just close this RSI real quick. And bring this ADX up here. What happened to the MACD line? Oh, it moved it. Oh, but why? What? Where's the MACD? Oh, it's up. There we go. Lost it. There we go. I don't know what's going on with this MACD line. It's okay, guys. We can easily put things back. You see? Just pop it back on there. Now we have a MACD and ADX. And we learned yesterday that the MACD, when it goes... Let's get one big. Get it big. Okay. So, for instance, here it crossed under, guys, right? It crossed under. And that is a sign to sell, right? Right. And then you can check it. This one's so... We'll go over this later. The Bollinger Bands. Where's my Bollinger Bands? These are Bollinger Bands. Indicators, guys. Indicators. You always have to have a bunch of indicators. That's what they're saying. Can be confusing, but learning to use the indicator within the context will clarify these issues. So why is it important? Traders can use RSI to predict the price behavior of a security. It can help traders validate trends and trend reversals. It could point to overbought and oversold securities. It could provide short-term traders with buy and sell signals. It's a technical indicator that can be used with others to support trading strategies, and that's what I was saying. If you watch yesterday's, we learned that sometimes the MACD can be misleading, just like they said with that, but you could double check with the ADX line. And we'll go over that again. Don't worry, guys. You could rewatch tomorrow or yesterday's video, but we are going to talk about that again. So, let me finish my coffee before... I don't want it to get cold. You guys know how I feel about cold coffee. I need a heater cup. Like, to sit it on there, and then it keeps it warm, and then I don't have to worry about drinking it so fast, because I got to pretty much down my coffee, because when I have hot coffee, I like it hot. And when I have cold coffee, I like it cold. Like, I want ice. And when it's hot, I want it hot. Like, burn your into your tongue hot. Right now it's just barely warm. Ugh. Okay. So, using RSI with trends. Modify RSI levels to fit trends. The primary trend of the security is important to know to properly understand RSI readings. For example, well-known market technician Constance Brown proposed that an oversold reading by an RSI is in an uptrend is probably much higher than 30. Likewise, an overbought reading during a downtrend is much lower than 70. As you can see in the following chart, during a downtrend, the RSI peaks near 50 rather than 70. This could be seen by traders as more reliable signaling bearish conditions. So, where did it peak? 50. It did peak around 50. Okay. So, they're saying 50 might be better than 70. So, many investors create a horizontal trend line between the levels of 30 and 70 when a strong trend is in place to better identify the overall trend and extremes. So, this horizontal line right here, they made that at the 50. And we can do that, guys. You can put, I don't know how to put it, but you can put it. We just have to figure it out. Oh, right here, right here. Oh, I did it. So you could like, oh, there we go. Yeah, it did it. You can put a line. We did it, guys. We put a line and we can move it. We can move it. Oh my gosh. Look at us. We got a line there. And then you can move your line. Oh my gosh, I just learned. You can move it. Oh my gosh. Yahoo Finance is so easy. Look, you could tilt it. It's just line. You could do another line. Can you do double lines, guys? Double line. Just one line. Oh, you could do two lines, guys. Oh, this is how you make your pennants. Oh, how do we take them off? Take this one off. Take this one off. Nope. Take it off. How do we take it off, guys? No. We're just putting a bunch of them down. I don't. Line. Oh, look at. You could change it. Oh, you could make an arrow. Oh my gosh. Look at this, guys. This is the greatest day ever. I didn't know it had arrows. I could point to everything for you. It's got tech. Oh my goodness. Now we just undo. Oh. A clear all drawings. Oh, we just learned something so great. Let's make this bigger. Okay, so we got to try this out, guys. That's all there is to it. I got to try it out. So, what we learned about, these are Bollinger Bands, guys. If you don't know, see this line up here? These are Bollinger but if I could talk. These are Bollinger Bands, and it has an upper resistance and a lower resistance. And so you see breakout here. One of the things that we learned about Bollinger Bands is when it has a tight squeeze like this. See how these are tight squeezes? Oh, let me give you guys this. Let me give you guys an arrow. Nope. Right there. Move it. Oh my gosh. Okay. Look at that. It's so cool. Okay. So you guys see right there how it's tighter than right here? Can we do a different color? Oh my gosh. This might be the funnest thing ever. I'll put one right here. Oh, it changed colors. Oh my goodness. You could do a skinny one. You could do a fat one. You could do a little baby one. Okay, let's see. A little baby one. Let's move this. Oh, look. He spins around. Oh my word. And this is all free, guys. This is just, you know what this makes me think? Look at this right here. We can move this guy. Oh, he's so tiny now. We can move him right here just to point at that. Look, and then we can zoom in on him. He's just a little guy. Look at him. You can pick any color you want, guys. This is the coolest thing ever. Yeah, that's right. I said it. Think about it this way, guys, before we finish. We'll get done with this, but think about this way. This is Yahoo Finance, right? It's just a free platform. You can go onto it, literally onto it, guys. Like, I have it up here on my bar. You could see it. I just click it. It's free. You go into Yahoo Finance, and everything is here free. Here's your tickers on the side. And click in any one you want. This is Fisker. And when you get in here, it tells you the summary, all the summary. It gives you charts, all these fun charts. It already has our indicators on it, but you could simply turn off an indicator by clicking it, like turn off the Bollinger Bands, and it looks just like candlesticks. See? Zoom in and look at your candlesticks. You can easily put the Bollinger Bands back on, save it. You can even edit the Bollinger Bands. Moving average, you could change the average. You can put this to 100 days. Yeah, now we got a 100-day moving average. You could turn that off. Oops, cancel. Turn it off. Turn off the Bollinger Bands. And bam, you're back. And this is all free, guys. You could change the date. You want 1 days. Do you want a 2-year chart? So you can look at what it's doing over 2 years. How about a 5-year chart? You want a 5-year chart? Do you want a 3-month chart? We can do a 3-month chart. You look at this 3-month chart. It's beautiful. So these guys, this is all free. You can even change these. You don't want a candlestick? How about colored bars? You want some little colored bars? Look at these colored bars. Ooh, that looks so foreign. Looks like hieroglyphics. How about a hollow candle? Oh, look at the hollow candles. They're so cute. I don't know. Which one do we like better? Oh, that one. That one's strong. Strong on your eyes. And that's weak on your eyes. These bars, man. I would have to be super weird to look at those bars all day. We'll change it back to candles. That's okay. We like the blue or the red and the green. It reminds me of Christmas time. It's like every day is Christmas on the stock market. Okay, hold on. Finish this coffee and then back to relative strength. Anyway, what I was saying, guys, before we go back, all of this is free. So when you go to the stock, there are things that, of course, online that you could pay for. But you can look at all their statistics for free, their historical data for free, their profile for free, their financials for free. This is all of it, total revenue. This is for whatever we clicked on. Which ticker did we click on, guys? We clicked on DeVito, which is kidney dialysis. So this is all, remember we talked about balance sheets, guys, and income statements and how to read them? We'll go over that again, and we are going to come in here and we're going to look at all of these on a lot of businesses. We're going to do 1 day of income statements, 1 day of balance and cash flow so that you can see these. But they also have conversations where you can see what other people are thinking. Nice move today. I think the investment banks do them a favor so they can buy back inexpensive stock. Almost annually, there's a really nice range. Howie, you ain't lying. They do everything to keep their money. They made the Buttonwood Agreement so that people couldn't steal their money. The richest rich that made the Buttonwood Agreement, they're the elite. They made the rules, guys. They made the stock market. Of course they made a favor for themselves so that they could come back around. Read the Buttonwood Agreement. They did it at the very beginning so they couldn't be ripped off. So, yeah, that's great, guys. It's a great, Yahoo Finance is my favorite finance site so far. And then, secondly, Investopedia. Maybe they tie for top, guys. Maybe these two tie for my top. But I'm also new to this, so maybe we'll find more. Let's pop back over here and finish looking. So we looked at the RSI, guys. Generally, when the RSI indicator crossed 30 on the RSI chart, it is a bullish sign. And when it crosses 70, it's a bearish sign. So if it crosses 30, guys, down low, let's go back to the chart. I'll show you. So we'll throw up. Oh, wait, do we have one yet? No, let's take down our MACD and our ADS, and then we will put up, put up our RSI again. Okay. So here's the RSI down here. We can make it bigger, guys. You could just do this, drag it up. Okay. So when it goes over 80, like right here, there, it's 80 and 20. I don't know why. we got to fix it. So close it out. Did you guys see that, how it was different? And it should have been 70 and 30. So go to the RSI. Yeah. And what we have to do is put 70 in there and put 30 in there. Show the zones. And I think that's it. Now let's do that. Okay. Let's move this up so we can have a bigger sight. Okay, so we got it 70 and 30. There we go. RSI, right? Now let's bop up here and see. So when it's at its highest highs, did it go over? Highest high? Yes, it went over. And they're saying, guys, that when it gets up here outside, that it's time to sell because it's oversold. So you see these areas where it's way out here? It's way up. They're saying that these areas, when it gets up here, is a time to sell. And when it gets, we have any low lows right here? This is a low low. It went down. They're saying this would be a good time to buy. You know, I don't know if I agree. That's why you have to check with other things, because if this was a time to buy right here, if you bought here, you might go up a little bit. But I mean, if you were just in it for a quick sell, you're going to go down. But this one almost touched, and that one would be okay to buy on. And I guess if you bought here and it went back up, you could sell. It's still, I don't know. Where else did it go down? It went down here. It went way down here. And this will be a good buy because it did go up, guys. So I guess just like with everything else, they were saying, let's go over here a little bit more. Maybe this is up. It's a sell. Yeah. So that's what they're saying, guys. When it goes up, when it's way up, it's oversold, right? Yeah. When it crosses 70, it's bearish. And what did we learn about bearish? Bears bear down on you, guys. They're going to bear down on you. But a bull picks you up by his horns and throws you up in the air. So it goes up, 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 up. So we got it. If it goes down, trend reversal, or a pullback. Overbought refers to a security that trades at a price level above its true or intrinsic value. That means that it's priced above where it should be. According to practitioners of either technical analysis or fundamental analysis, traders who see indications that a security is overbought may expect a price correction or trend reversal. Therefore, they may sell the security. The same idea applies to a security that technical indicators such as relative strength index highlight as oversold. It can be seen as trading at a lower price than it should. Traders watch for just such an indication might expect a price correction or trend reversal and buy the security. So what they're saying is when it goes down here, it might be looking at a trend reversal. And it did here, guys. If you look, go up, go up, go up. So it dipped down a little bit right here. And it dipped down here, guys. So if we bought right there, it is looking at a trend reversal because it dipped down low and it went back up above the 100, which is the moving average. Or not, that's not the moving average. Where's our moving average on here? Let's throw a moving average. We'll throw a 50-day. 50 days fine. So right here, we're down below the 30. Right there, guys. You see it? Right there. Hold on. Got to draw something. I'm going to get you a little arrow. So what we're looking at, guys, is this. Right there. You see that? Okay. Perfect. Now, also, what correlates? Right here, guys. You see? Look at me. I'm so sophisticated. Okay, see, it drops down. Pink line, guys. Pink line. These lines are so light, aren't they? So, pink line, it dropped down, right? So, our moving average, it dropped down below the moving average. What's that? That means it's low, guys. So, the price is low. Price is low. It might be in for a trend reversal, and it does. We'll give you a line. Watch. Show you. There's a line. So, oh boy. So winkety dinkety. So what it kind of looks like, I don't know how to make it stay. So if we look, guys, to here, you know what it kind of looks like? I'm going to show you. Hold on. You guys let me know what you think it looks like. Okie dokie. Look at that. There we go. What is it, guys? Let me scoot up for you. I know it's not. Hold on. Get a little bit. Look at what it is, guys. It's a pennant. We made it. It's a flag. It's our very first one. Yay, it's trend, guys. It's a pennant flag. It's an indicator. Made a pennant. Look, you guys, so you know what I'm talking about. I'm not crazy. Pennant, indicator, stocks. Like that. That's a pennant, guys. Look it. A continuation pattern. Followed by a breakout. Is it followed by a breakout? Maybe not, but this, I don't know. Let's see. Oh. Ooh. Okay. It did, though. It broke out above. You guys see that? And then it went down, and then it broke out above, and then it went down, and it broke out above. What? That's something, guys. When it does all that in a row, with a bunch of pennants in a row. What's a bunch of pennants in a row? A long continuation. Oops. I can't type with this mic in my way. So, continuation patterns. Triangles. That's what we got, guys. Triangles. What happens if there's a lot of triangles? See, that's what I was trying to make. It's like a triangle. But it was ascending. It was going up. This one's not a very good triangle compared to our triangle. It's kind of like a flag, huh? Like this one? More like a pennant. It was this one. I think ours is like this. If it contains more than 20 price bars, then it could be a triangle. We need to read this tomorrow. Let us save this. How do we save it? We save this, star it. Done. Okay, so we save this. We're going to read this tomorrow. Because let's see if ours have more than 20. Oh, it's got a lot more than 20. Ours is huge. Ours is like 1,000,000 bars. Look at it. Ours is huge. So, back to RSI. So, now we know, guys. Make sure my coffee is done because I do not want cold coffee. Okay. So the same idea applies to a security that technical indicators such as relative strength index highlight as oversold. It can be seen as trading at a lower price than it should. Traders watching for just such an indication might expect a price correction or trend reversal and buy the security. So interpretation of RSI and RSI ranges. During trends, the RSI readings may fall into a band or range. During an uptrend, the RSI tends to stay above 30 and should frequently hit 70. During a downtrend, it is rare to see the RSI exceed 70. In fact, the indicator frequently hits 30 or below. So if it's in an uptrend, let's say this is an uptrend. This is an uptrend. Yep, it never hits 30. You see in our uptrend, man, I did this good. Our uptrend ends right here, right? This is what we said. This is a continuation upward trend, right? With a pennant. That's what we said. So it started here. It gave us our mark here. It bopped down and told us to buy, right? Yeah. Yeah, now I'm getting it. Okay, hold on, guys. We got this now. We can understand it now. So then, let me move this up a bit. We got to adjust all this. So then, right here, guys. Okie dokie. Come on, little arrow. I don't know why it doesn't want to listen, guys. There we go. So right here, guys, this is the end of our trend, right where this arrow is, right? Okay. We got this, guys. So then we got another end right here, guys. Okay, so now we got a mark for you. See it. It's down here. It bopped down below the 30. You see the 30 line right here, guys? This is the 30. And it went down below. That is an indicator that it is undersold, guys. Underbought. So you need to buy more. So you buy more right here, and then we noticed a pattern, a continuation pennant that goes up. It's an upward trend, right? And they said that during this time, they just said it, that during this time, it stays in a band, guys. It tends to stay above 30 and should frequently hit 70. Okay, let's see if it did. So it stayed above 30 this whole time between here. It did. Stayed above 30, right? And it hit 70 2 times. So both of those qualified. The guidelines can help traders determine trend strength and spot potential reversals. For example, if the RSI can't reach 70 on a number of consecutive price swings during an uptrend, but then drops below 30, the trend has weakened and could be reversing lower. So let's see where it reversed. So here we go, guys. We got our reversal. They just told us. Let us look a little bit closer. We're gonna zoom in here. Can we zoom in? Okay. If you look, guys, it hit here, right? It hit here. We're on an upward trend. We're noticing our trends, guys. We're making lines on the charts, and we're only staying in the buy as long as it's healthy for us, as long as it's beneficial, right? So we get in here, we buy here. This is our buy mark. It's confirmed. We bought. Now we stay in. When do we go out? Do we go out here when it drops down? No. Do we go out here when it's up at the top? Probably not. We're on a continuation, so we just keep holding. We're watching our numbers, though, guys. It starts to drop down below. If you see, it starts to drop down below right here. And you wonder, should we get out? Let's wait and see a second. We have our stop loss in place down here at the 30, probably around here, so that if things go bad, we can sell. We have our stop loss set. And then, guys, because it crossed underneath the moving average, you probably are thinking, what's happening? What's happening? Maybe you want to sell right now, but we get one more big pop out right here, right? You get one more good pop. And see how it crossed down and over like this under the moving average? That might have been scary, and people may have sold here. And that's okay. You could get back in down here. You could get back in. It's okay. Once it crosses over this moving average again, you could get back into the sell. You see how many times you could get in and out in just in this one little area. So if you got in here, when it crosses above, and then it crosses above here, guys, these are your markers. You see how when it come down here, it didn't reach the 70, it didn't go above again. If we were on a good continuation, this should have went above again. This is your signal, guys. It hit, but it didn't go above. And we're getting red candlesticks. Pull out. If you started here and you pull out right here, look how much of a gain that is, guys. It's 123 up here. If you pull out right here, it's 129. And if you went in right here, it's 102. So you would have gained almost $20-something just for being in this trade from, what's the date on this one? Let's go down to the date so we see how long this trade was. Where is it? So it wish they had time or something on here. Where does this show the time? I don't know. But either way, let's go in a little bit closer. So you see these candlesticks, you got 3 in a row, you drop below. This is where I would get out of the trade. And why I would get out of the trade is because it didn't hit 70. It seems to be dropping below our pennant right here, right? Our flag, it's dropping below that. It's heading down, back down to the moving average. And we just had this dip down here. So I'm thinking it's going back down. If I didn't see, guys, if we couldn't see what was over there, if we didn't know what was happening, we would probably want to get out. And that's a good idea because it drops back down here and down below the 30, which means it's overbought right there, guys. So, and then you can see it, it drops way downtrend right here, guys. Right here where we have this is a huge downtrend. That's our down. Oh. Womp, womp, womp. There we go. So this downtrend right here bops down. And then it doesn't come back up. You have all this. This is all really volatile. And it doesn't come back up until right here. And then it comes back up. You can see it moves above the moving line. So right here was a perfect example of entrance and exit points, a flag continuation. It's a pennant. It means a continuation, upward trend. And we learned about how to use the moving average and how to use an RSI, guys. So the opposite is true for a downward trend. If the downward trend is unable to reach 30 or below and then rallies above 70, that downward trend has weakened and could be reversing to the upside. Trend lines and moving averages are helpful technical tools to include when using an RSI. So, uptrend, guys, what do we see? So, it can't go down, finally goes down, it touches, and it goes back up. It goes back up. So, we have, let's take that little pup out of here. Clear. How do we do that, guys? Clear them. Clear drawings. There we go. Okay. So, upward trends. Do the same thing, guys. That was the upward. Downward ones do the same thing. Drop down too many times. It's downward trend reversal. So we watch for those. Be sure not to confuse RSI and relative strength. The first refers to changes in the price momentum of one security. The second compares the price performance of 2 or more securities. So one does the movement. That's the one we're on right now. And relative strength compares 2 or more securities. Okay. An RSI divergence occurs when price moves in the opposite direction of the RSI. In other words, a chart might display a change in momentum before a corresponding change in price. So let's see. Change in movement before a change in price. Yeah, we saw a change in movement right here. And the price didn't really drop. You see the movement drop down below. It was up. And it dropped down well before it was down here in price. I guess it didn't. Stayed above the moving average. They're right, though. 50 is about where it starts dropping below the moving average. If you put it at 50 right here, right where this X is, that's going to be at the moving average. So, a bullish divergence occurs when the RSI displays an oversold reading followed by a higher low and appears with lower lows in the price. This may indicate rising bullish momentum, and a break above oversold territory could be used to trigger a new long position. A bearish diversion occurs when the RSI creates an overbought reading followed by a lower high that appears with higher highs on the price. As you can see in the following chart, a bullish divergence was identified when the RSI formed higher lows as the price formed lower lows. So, falling price lows. This is a new low low. You see the price? It goes down, down, down. This is a new low low. There's nothing lower. So rising RSI lows. So as it fell, it hit a new one here and a new one here. So it was identified when the RSI formed higher lows as the price formed lower lows. This was a valid signal, but divergences will be rare when a stock is in a stable long-term trend. Using flexible oversold or overbought readings will help identify more potential signals. So, a low low and a price low. So, an additional price RSI relationship that traders look for is positive and negative RSI reversals. A positive RSI reversal may take place once the RSI reaches a low that is lower than its previous low at the same time that a security's price reaches a low that is higher than its previous low price. Traders would consider this formation a bullish sign and buy signal. I was going to say buy a signal. What's a signal? And a buy signal. Conversely, a negative RSI reversal may take place once the RSI reaches a high that is higher than its previous high at the same time that a security's price reaches a lower high. This formation would be a bear signal and a sell signal. So, example of RSI swing rejections. Another trading technique examines RSI behavior when it is re-emerging from overbought or oversold territory. This signal is called a bullish swing rejection and has 4 parts. The RSI falls into oversold territory. The RSI crosses back above the 30. The RSI forms another dip without crossing back into under the 30, and then it breaks its most recent high. So it dropped down, it goes up, it drops down but doesn't go below, and then it jumps out. That's the breakout. So there's a bearish version of the swing rejection signal that is a mirror image of this. So it breaks up, it goes down, it doesn't break out, and then it goes down. So they're going to show us that. It rises over into overbought territory. So it rises up into overbought territory, right? Then it crosses back below. And then it forms without crossing over. It goes up, but it doesn't cross over. See how it doesn't cross? And then it busts back down, and that's the breakout. And this would be a sign to sell. So let us see if this does it in our example. We had our arrows right. I don't know where we had our arrows, actually. I don't even remember. Okay, so we're here, down, below, and down. Okay, so let's do this here. It came up. It came up, right? It broke. Then it didn't break. And then it broke out and it went down. So this is an example of... It's called, what is it called, guys? It's called a bearish version of the swing rejection signal. A bearish swing rejection signal. It rises above the territory. So it rose up here, guys, right? Then it crosses back below the 70. It did. Here's the 70. It crossed back down. Then it rises and doesn't, it almost touches, but it doesn't touch. That's the next one, see? Without crossing back in. And then it breaks its most recent low. And it sure did, guys. It broke its most recent low right here. And that is a breakout. That's called a bearish swing rejection signal. Look at that, guys. We learned a bearish swing rejection signal. It's right here and we can identify it. It bopped up. It didn't bop up. And then it sold. Or it didn't sell. It went below. It fell. It did it here too, guys. It bopped up. It tried. It didn't. It made its new lowest low. And this, if you notice, this happens kind of a lot. It bopped up. It didn't make it. Its new low. If you go back over time, it does it like it several times. And that is called a bearish swing rejection signal. The signal will be most reliable when it conforms the prevailing long-term trend. Bearish signals during downward trends are less likely to generate false alarms. So, the difference between RSI and MACD. The moving average convergence divergence, which we talked about yesterday, guys, you could bop into the folder called Stock Market Learning and watch yesterday's on the MACD. is another trend following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26-day period exponential moving average from the 12-period EMA. The result of that calculation is the MACD line. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD line. It can function as a trigger for buy and sell signals. Traders may buy the security when the MACD crosses above its signal line and sell the short the security when it crosses below the signal line. And yesterday, guys, we learned that. Remember, we can easily put an indicator called a MACD line. There's 12 days and 26 days with a 9-day signal. Just like they said, MACD line is purple. So we can little this RSI and look at the MACD line. MACD is purple, guys. So when it specifically said, if may buy the security when it crosses over the signal line and sell it when it crosses below. So if it crosses over to go up, you might want to buy. Like right here, it went over. May signal to buy. Like here, you guys see right here? Look how right here it goes over. Right here. We got, oops. So right here we got this signal. And it's crossing over. And that, guys, is a signal to buy. And then we have another one. And it, let's grab this little guy, is here. You guys see that signal? This signal is crossing under, the purple is crossing underneath the orange line. And that is a signal to sell. Momentum buying, guys. So, the RSI was designed to indicate whether security is overbought or oversold in relation to recent price levels. It's calculated using average price gains and losses over a given period of time. The default time period is 14 periods, with values bonded from 0 to 100. The MACD measures the relationship between two EMAs, while the RSI measures price change momentum in relation to recent price highs and lows. These two indicators are often used together to provide analysts with a more complete technical picture of the market. So that's what I was saying, guys. When you learn these, you want to throw indicators on here. There's our Bollinger Bands. This will help us to know when things break out of this is the upper resistance and bottom resistance. And when things break out, it could be a sign to sell or buy. Like here we have a breakout, right? Here's a breakout of our Bollinger Bands. Here is, let us see what, okay, this is a good one. This is a good one. We broke out on our Bollinger Bands. That's a sign to buy. We broke out over 70 on our RSI. That's a sign to buy. Or it's overbought. It's a sign to sell. It's going to go down. Then we crossed the MACD line, and those are all strong upward trend momentums. Momentum. See, guys, it's movement. So these indicators both measure the momentum of an asset. However, they measure different factors. So they sometimes give contradictory indications. For example, the RSA may show a reading above 70 for a sustained period of time, indicating a security is overextended on the buy side. And this one did. You guys see that? Up here, it said it went up, and it said it's overextended. So you might think about selling, right? It's overextended, but the MACD tells us we should purchase when it crosses over. And the Bollinger Bands say when it crosses over, this might be a good idea too. So we can also throw up, where is it? Our ADX. Where's our ADX, guys? So pop down here to our ADX, and we can see our ADX line. Where's the ADX? It's the green one, and it also made a bobble move. Look at that. So we got the green here. Everybody lines up. Everybody reacted. You see all that momentum change in all of them. This one, we had the green line, which is the indicator bop up. This one, we had the purple line bop up. This one went above 70. All momentum indicators, guys. They're all showing momentum. So at this location, we had all of those indicators. So at the same time, the MACD could indicate that buying momentum is still increasing for the security. Either indicator may signal an upcoming trend change by showing divergence from the price. The price continues higher while the indicator turns lower, or vice versa. The RSI compares bullish and bearish price momentum and displays the results in an oscillator placed beneath the price chart. Like most technical indicators, its signals are most reliable when they conform to the long-term trend. True reversal signals are rare and can be difficult to separate from false alarms. A false positive, for example, would be a bullish crossover followed by a sudden decline in stock. A false negative would be a situation where there's a bearish crossover, yet the stock suddenly accelerated upward. Since the indicator displays momentum, it can stay overbought or oversold for a long time when an asset has significant momentum in either direction. Therefore, the RSI is most useful in an oscillating market, a trading range, where the asset price is alternating between bullish and bearish movements. What does RSI mean? The Relative Strength Index, RSI, measures the price momentum of a stock or security. The basic idea behind the RSI is to measure how quickly traders are bidding the price of the security up or down. The RSI plots the result on a scale of 0 to 100. Readings below 30 generally indicate the stock is oversold, while readings above 70 indicates overbought. Traders will often place this RSI chart below the price chart for the security so they compare its recent momentum against its market price. So, some traders consider it a buy signal if the security's RSI reading moves below 30. This is based on the idea that the security has been oversold and is therefore poised for a rebound. However, the reliability of this signal will depend in part on the overall context. If the security is caught in a significant downtrend, then it might continue trading at an oversold level for quite some time. Traders in that situation might delay buying until they see other technical indicators confirm their buy signal. What happens when RSI is high? As the relative strength index is mainly used to determine whether a security is overbought or oversold, a high RSI reading can mean that security is overbought and the price may drop. Therefore, it could be a signal to sell the security. So what's the difference between the two? RSI and moving average convergent divergence, or MACD, are both momentum measurements that can help traders understand a security's recent trading activity. However, they accomplish this goal in different ways. In essence, the MACD works by smoothing out the security's recent price movements and comparing that medium-term trend line to a short-term trend line showing its more recent price changes. Traders can then base their buy and sell decisions on whether the short-term trend line rises above or below the medium-term trend line. So, if you need help, you can hire a pro, or you could just sit here and learn until you know. And that, guys, is the RSI. That was so much. I'll be right back, guys. I got to take a restroom break really quick. Do not go anywhere. Sit here and wait. Drink your coffee and drink some water. All righty. Hairs everywhere? That's fine. All righty. So, we finished our relative strength index. That was great. And now we know some different indicators, guys. Let us finish up. We'll read this tomorrow. I saved it for us. Continuation patterns. And let's check out the news real quick before we go, guys. It's already been an hour. We cruised right through that. We learned about a new indicator, and we learned how to use a lot of the tools here on Yahoo Finance. So we got regional bank turmoil still, guys. PacWest stock plunges 30% after losing 9.5% of deposits last week. Man, guys, these banks, they're ticking down, ticking quick, right? It doesn't want to read that article. It doesn't want to read any article. What's happening? There we go. Regional bank stocks plummeted again Thursday after troubled California lender PacWest disclosed it lost 9.5% of deposits last week on a wave of new pessimism surrounding the industry. The Beverly Hills, California-based institution first came under investor scrutiny following the March 10th failure of Silicon Valley Bank. PacWest stock took another dive last week following reports that it had been weighing a sell or capital raise. Those headlines past week, PacWest said in SEC filing Thursday, heightened customer fears of safety of their deposits. The majority of the 9.5 drop last week happened on May 4th and 5th. Shares of some other regional banks that experienced pressure from depositors, investors, and REITs this month also fell. The stock of Western Alliance seesawed after saying that its deposits rose by roughly $600 million. Western Alliance, they're up. PacWest. Let's see where they're at. Where's PacWest? Why didn't it go to PacWest? Bancorp. Let's see what their conversations say. They're always so funny. Huge opportunity to invest and lose all your money. Jeez, Robert. We gotta sign in. They won't let me just comment. That's fine. Jack said massive squeeze is coming. You either in or squashed. May 4th, insiders had option of stock or money. They took stock. Mr. Drysdale better get Jed Clampett on the phone. Huge opportunity. All the bankers get rich off us poor folk. This is 100% the truth, guys. It's what's happening with real estate. It's what's happening with everything. All the rich people get richer off us poor folk. I don't know. These people don't know what they're talking about. That's what happens in most of the comments, in most things. People never know what they're talking about. Disney, cooling inflation, PacWest outflows. We don't want to watch videos. This AI pinpoints when to get in and out of stocks. If I was a bank, I would say I was getting a bunch of deposits too. I wouldn't want anybody to be afraid. Like, they put banks in a bad position. The poor banks, and I don't mean poor like they're actually poor. I mean like little banks. Like PacWest is nothing compared to JP Morgan. So it is what it is. Nothing good. Nothing real. The stocks you need to be watching. Man, so many banks not doing too hot. What do they got on the front page? They got better stuff on the front page. Oh, the FDIC wants banks bigger than $5 billion to pay for SVB and Signature failures. Giant banks and regional lenders with more than $5 billion in assets will help pay for the March failures of Silicon Bank and Signature Bank, according to a new proposal from the FDIC, sparing small community institutions from putting part of the bill. The FDIC now estimates it'll cost $15.8 billion for it to protect all depositors at those two institutions who are above the FDIC's $250 per account insurance level. It took that step to prevent a wider panic in the financial system. The FDIC typically replenishes the deposit insurance fund with quarterly fees paid by all banks. This time, it's levying a special assessment to recover losses associated with uninsured depositors and thus has more flexibility to decide which banks should contribute most. The proposal announced Thursday asked the largest banks to pay more than 95% of the special assessment. A total of 113 banks would pay something. Some roughly 4,000 banks wouldn't pay anything. Smaller banks lobbied for that. They got a new formula. So they told us that Silicon Valley clients went to JP Morgan. So JP Morgan gains the clients, gains the deposits, and should pay the money. JP Morgan, if they took over Silicon Valley, should pay for all of the bill, right? If you're a business, like let's say you do construction, not banking, you do construction, and you have 5 customers, and you're a small construction company, and you have 5 customers, you're building decks for all 5 customers. You have another friend over on this side who is a big construction worker, and he does, millions of decks every year. He does 1 million decks a year, and you're over here, the little deck guy, and you make 5 decks a year. If you go out of business, your 5 decks still need to be made, right? So if you give those 5 decks over here to Mr. $1 Million Man, right, that has 1 million decks to build, he'll have to build those decks, right? Those people will pay him for the decks. He'll build the decks. He'll get all of the income. He'll get everything, right? So why wouldn't he have to pay for all of the deck supplies? Why would other banks have to pay for part of these 5 deck supplies so that the $1 Million Man could make those 5 decks? I don't understand. Somebody explain it to me like I'm 5 years old in the comments. I understand that we have to pay for these people who were above the FDIC, right? But why? But if you gave I understand if we didn't give the accounts to anybody. We close the accounts, we give the people back their money, and we let them bank wherever they want, right? That makes sense to me, but that's not what we did. We didn't tell these people at Silicon Valley and Signature Bank, here's your money back, bank wherever you want. We gave, I don't know about Signature Bank, but I know Silicon Valley Bank in particular gave those accounts, the big accounts, they gave them over to Chase. So that means they're Chase's accounts now. So why are even though it's $5 billion, I understand there's some of these ones, some of the Signature Bank ones, but from Silicon Valley, if they gave the accounts to Chase, why is anybody else footing the bill? Why wouldn't Chase foot the bill? It's their accounts now. You get what I mean? Like, I understand that the money was lost, but Chase is gaining from it. Yes, they'll have to replace $250,000 or $3 million, but they're also gaining by having somebody with a $3 million account as their customer that can't take the money. You can't just go to a bank. Like, say you go to Silicon Valley Bank and you have $3 million in Silicon Valley Bank before it closed. You can't just walk into Silicon Valley Bank and tell them I want my $3 million out in cash. You can't do that. So therefore, you can't just walk into Chase after your account went from Silicon Valley and given to Chase. You can't just walk into Chase and say, hey, I want my $3 million out right now. This doesn't happen that way. Banks don't work that way. You cannot go get $3 million out in one day. So therefore, when this gets repaid and all that money from Silicon Valley goes into Chase as these people's accounts, Chase gets to use that money and make money off of it. They will make their money back. Chase should have to foot the bill. If the bill is $5 billion in order to get all of these people in their bank, they should have to foot the whole $5 billion bill. Because what are they going to make off of that? It's like saying he should get those 5 jobs for free just because he has 1 million jobs. He shouldn't get those five construction jobs just because he has 1 million jobs. And nobody else should have to pay for those 5 construction jobs but the guy who's going to make money off of them. Because it's not the same as with construction. It's like he's building 5 decks and he gets to use them all. He's going to have parties on those 5 decks. And he's going to make money off those 5 decks. He's going to rent them out for parties. So of course he should have to pay for the 5 decks, right? Our country's messed up, guys. They make everybody pay for things that other people are going to make money off of. They make us pay for taxes that banks and rich money make money off of. It's how our country works. That's capitalism, guys. And we just keep let it happening because that's the way it works. That's capitalism. It's not very smart, guys. It's not very smart at all. And if we keep let it happening and keep let it happening and keep let it happening and then Chase fails one day, what are we going to do? When it destroys our entire money system. Because we keep allowing these rich people to keep taking this money. And they take it away from us, guys. The money's not still, it's in the banking system, Squealer D. No, it's not. These rich people have it. It's not in our banking system. It's not in our system. It's not being spread out to the poor people. It's gone. They took it. Billions and trillions of dollars, and they took it. How much money does Jamie Dimon have in his personal account? They got a war room on the debt ceiling. You know, they make everything such a big deal when it doesn't have to be a big deal, guys. How many times have you and your husband or you and your wife or you and your significant other had to have debt ceiling talks? Okay, honey, I'm not getting paid as much this week, and we got 4 bills due, so we're gonna hit a debt ceiling, and I'm not paying no more bills. I'm not gonna keep paying these darn bills. Like it's ignorant, guys. We allow our country to do something that we would never, ever allow ourselves or our loved ones to do. Like why? Because we don't care about our country. That's why we have people shooting it up. Because we don't care about our country. We don't care about our relationships, and that's why they fail. Most marriages fail now because we don't care. Why are we letting this happen? Let me know in the comments why you think we're letting this happen. When we're talking about the banks and our money and debt ceilings and we don't do anything, why not? We see riots for everything else, but we never see riots for money. In America, we never see riots for money. Why not? Why aren't we out here telling CEO Jamie Dimon to shut up? And all of these Republicans that don't want to raise the debt ceiling because they want to get something out of it, why aren't we telling them to shut up? Like literally, just shut up. We have to do what we have to do, and instead we're letting them fight about it, and we don't do anything as civilians. As the civilians of America, we sit back and let them do anything they want with our money. In France right now, in Paris, they're fighting because they moved their retirement age by 2 years, and they're still rioting. Other countries, when you mess with their money, they still are rioting, but not in America. In America, you could tell us, they're not going to raise the debt ceiling, and we're not going to pay our military. We're not going to pay our Social Security. We're not going to pay our poor people. We're not going to have public assistance because we can't decide on what we can give or take in Congress and the House guys. And so we're going to go ahead and go into debt. And we're going to hit the debt ceiling, and we're going to lose our credit rating. And it's because we can't get along and we can't decide. Well, if these guys were parents, if the people in charge of the debt ceiling were our parents, right? And they were fighting over money like that and threatening not to pay the bills, and we're going to go into debt, and they're going to hit our credit real hard, and it's going to cost us a lot of money. You know that you could lose your children for that? But here we are, the children of our government, and nothing happens. It's okay. We can all suffer for that. There's no repercussions. There's no parental abuse in this case. There's no governmental abuse. We just let them keep abusing us until they have us back where they want us as slaves, like full slaves, guys. We got to stop talking up. Speaking out is the first way. And we're not speaking out against Republicans, and we're not speaking out against Democrats. We're speaking out against our government, guys. We're speaking out against the government who allows these banking systems to do this to us. They stole the power in the middle of the night, the banking systems. They went in and changed our laws in the middle of the night without our say-so. And now they do whatever they want without our say-so. And our government lets them do it because our government makes money out of it. That's how we make our government money. And then the poor people that take care of this country, that run this country, they get left with nothing. So that this guy and the government people can get their money. And our country just falls in the wayside. Our infrastructure fails. Look at our schools. Look at the state of our schools, guys. Just Google what place we're in the United States. How well is our schools doing compared to other people in the world? Just Google it. You'll see our schools have failed. Our money system is failing. Our farms are failing, guys. Google it. All the big guys, Berkshire Hathaway has bought up 70% of our farms in the United States. You know what happens when a small farmer doesn't own his farm? It means he makes nothing. It means he lives on that farm and he works his life on that farm and he literally makes nothing, guys. You can't make money as a farmer if JP Morgan and Berkshire Hathaway own your farm. You have to pay them, guys. If you're paying somebody as a farmer, you're not making money. You know why? Because farming makes very little money. It's to feed us, guys. It's something we abso-freaking-lutely need. The guy who sharpens your knives, he doesn't make very much money, but we need sharp knives, right? The people who make our food, they don't make very much money, but we need them. And if we sell their farms to Berkshire Hathaway and JP Morgan, and they just have to live there and work on them, then what are they more than just working slaves? They don't even own their own farm. They can't even say, I own my farm. We're losing, guys. We're losing in all sectors, except for capitalism. Capitalism's doing good, guys. And that is why we're here learning the stock market, because what do we say? If we can't beat them, join them. I cannot change this for you guys. I can't. I wish that I could talk to Jamie Dimon and I could tell him, why are you such a turd? A turd. Like, you sit here and you act like you are for the people, and you are not. You are for the money. And the money does not care about the people. You are a turd. And I would tell him that. I would tell him right to his face. Like, you can fix things for the people and you don't fix things for the people. And that's a turd thing to do. But I can't. I can't talk to Jamie Dimon. He would never talk to me because I would call him a turd. So he would just refuse my call. He would refuse my sit down. So people like this, they won't talk to us. They won't have a conversation with us. They won't acknowledge our strife and our struggle. You want to know what they tell us when we tell them about our struggle?
Well, guys, money doesn't stop your struggles. I have struggles too. Yeah, I'm sure you struggle to pay your rent. I'm sure you struggle to find food for your children. I'm sure you struggle to find a way to work. I'm sure you struggle to find gas money. Like, this guy doesn't even know what struggle is. Yes, he faces the struggles of life. Like, perhaps his mother died and his father died and maybe one of his kids had cancer and his wife left him. But guess what? Guess how much easier all those struggles are when you're a freaking millionaire. I'm not saying I'm not saying that it's easy. I'm saying how much easier they are. If your husband dies and you have no money to your name, and your husband dies and you are the JP Morgan CEO, which do you think is easier? You think that they're not going to let you at JP Morgan take a little time off to cry about your spouse? They will. They're going to pay you for it too. They'll probably provide you with free mental health care. Now, if you work at Fred Meyer's and your spouse dies and you're the one paying the rent, you think you get to take that healthcare time off, mental health time off? Do you think that Fred Meyer's is gonna give you time off to cry for your spouse? Do you think that they're gonna pay for your mental health for you to get over your spouse dying? All of that's a big negatory, guys. Big negatory. But we just recently had a senator, guys, take some time off for mental health. How many of you guys at retail jobs have taken time off for mental health lately and got paid for it? How many of you have gotten provided a stay at a relaxing place so that you can relax and get your mind right before you go back to work at Fred Meyer's? Probably none of you, right? But this dude did. So when he says, everybody has problems, he doesn't mean himself. He means that everybody has problems, so shut up and don't talk to him about it. That's what he really means. And it's not just Jamie Dimon, guys. I'm not just mocking Jamie Dimon. I'm mocking every single person that has a chance to change things for us normal, everyday folk that are struggling, and they don't. They don't even attempt to. There's maybe, 15 people in the government right now that even speak up for poor people? And the rest, you know where they're at? They're right here, guys. I'm going to tell you where they're at. They're right here selling all of these bank because they know the charts. They see it go down. They know when to sell, and they sell it. And they're not only buying and selling stocks, guys. They're selling and buying options. And the options are like insurance on the stock. So let's say we see this and we know this stock's going to go down. We see it. We know it's going down. So what we do is we buy an option. It's called a put. And we buy it. It's insurance. If this stock really goes down, we can make hundreds of thousands of dollars off of our guess that it's going down. It's so that if we own this insurance and we guess that the stock's going down, we don't actually have to sell it. We can make back the difference. We can hold the stock so we don't have to lose it. Put the put. It's an option. Make a put. So we make the money off of the fall to make up for the money that our stock fell. So when it inevitably, cyclically goes back up, our stocks are still good and we made the money anyway. There are always safeguards for rich people, guys. Always. And that is why we have to get there. You either have to get rich or die trying, because there's no other option in America. And if you want to leave America and get out of the rat race of corporate America and all of this capitalism, then you still have to get the money to get out of America. You can't leave America poor. I mean, I guess you could. You could just walk across the border to Mexico and live in Mexico, and it would cost you a little bit less, but you'd still have to work over there. If you went over the border up to Canada, it would cost you more. So I don't think that there's an option for being poor and just leaving America. You have to get the money. And in order to get the money, you have to get educated to get money. Money, enough money to make yourself either rich or to get out of the country does not fall off trees. It's not free. Everybody thinks, oh, the poor people, they just get free money. Okay, let's talk about free money. Let's say you can get free money to get out of the country. Let's see how much we can get. You can get Social Security. That's about $900 in this country a month. $900 to $1,100 a month. Is that going to get you out of the country? No. Even if you saved up $900, $1,000 a month for a year, you'd still only have $12,000. That's not enough. So let's say you double scam and you get Social Security and you get welfare. So now you get welfare for you, and let's say you have a couple kids. So you get what? Another $600, $700 a month cash and some food stamps. So now you're buying food and you're making $1,700 a month in free money. And let's go real big and say your wife is doing the same scam. You and your spouse are doing the same scam. You're scamming welfare, you're scamming Social Security, you're scamming whatever you can scam. And you guys bring in $3,000 a month. It's still not enough, guys. $3,000 a month is barely a full-time job. You and your wife can scam for $3,000 a month and still in America not make enough money. You're still living in poverty. You have to get on the big end scams. And by that, I mean business scams, LLCs. You have to take out PPP loans like all these people. There are a million scams that these people are doing, and none of these scams are making them as rich as the people that simply get into power. They work at a bank, or they work in our Senate, guys. They work in our actual government. And then you know what they do? They go to these high watch lists and they talk to each other and they sell stocks. Almost every single person in our government, with the exception of about 20%, have stock interest, guys. They're buying stocks. So when they went to all those meetings for Corona and they knew that the banks and everything were going to close down, the hotels and everything were going to close down for Corona, they sold before they told everybody about Corona. They sold all their stocks in airlines, in hotels, anything that was in travel, guys. They sold that stock. And then you want to know what happened to that stock after that happened? They all shot down. All the stocks went down. And you want to know what they invested heavily in? They invested heavily in medical, in sanitization, hand gloves, 3M. Guys, they knew they were in our government. They knew that the pandemic was coming. It was on the horizon. They had information. It's called insider information because they're part of the government, because they're part of banks. They had insider information, and they changed their portfolios around before we even had a chance to know what was happening. So if you want to be on their level, you have to grift on their level. And they say it's not grifting, guys. They say that it's perfectly fine to be in our government and do insider trades like that and change and trade and make money off of things that we don't even know about it. So we can't make money off of it. But they say that that's legal. So if we want to play their game, we have to play their game. And that means their game is either we're rich like them and we take advantage of what we can take advantage. And I don't mean stealing. Like, that was just an example to show you can't get very much. Abusing our system, you can't get very much. You have to abuse the system at the level that governors and senators and congressmen abuse our system. They have put things in place, just like I told you guys. If you go back and read about the Buttonwood Agreement, that was put into place so that the rich people could not be taken advantage of. So they have put things in place so senators and congressmen and the like can make money without it being illegal. So maybe that's our goal, guys. We get rich and we move, or we become part of the government, because you could do it. Who knows what our next step is? But the very first step, I do know what it is. The very first step is to learn, guys. And that is why we're here. So if you're just stopping by, this is a Monday through Friday stream. And we always talk about the stock market. We are learning to trade on the stock market. We started at the very first one with what is the stock market? And those can all be found. There's about, what are we on, 29? So there's 28 other ones in our playlist on YouTube. We have, look, we can show you. We have a little, can't type. So here we go. If we go to my lives, we have today's, but in our playlists, bop into playlist, guys, we have Stock market learning. Look at this. Stock market learning. Come on. And there we go, guys. All of the videos are in here from the very first day. What is the stock market? And they're all about 30 to a little over an hour long. So it's not very long. If you look through, you can, what's a stop loss? Investment survival, trading plan intro, buying and selling, stock order types, technical analysis, stock chart patterns, trading platforms, think or swim, investment strategies, how to trade stocks. Just a bunch of different ones, guys. You can check them out. You learn with me. And that is all for today. Tomorrow we'll be back. We already have something to look at for tomorrow. So we are ready to go. I think that is it, guys. I will be back here tomorrow for our Friday version. Same time, same place. Be there or be square. I hope you guys have a wonderful rest of your day. And I